Welcome to Achieve Wealth through value-add real estate investing. This is the show where the guru hype is banned and you get direct insights from commercial real estate operators. If you're a passive investor, this show can help you better understand investment opportunities. And if you're an active investor, the lessons from each episode can help you to become more effective in your own deals.
This webinar was previously recorded and converted to a listening format. Now, please enjoy this timely and valuable market information from expert commercial real estate investor James Kandasamy and special guests.
Hi, this is James Kandasamy from Achieve Investment Group. Today, I have Wayne Courreges, who's living now in Houston. Wayne is one of my students and has been very successful in the past 3 years. He started with me, and now he's doing a lot of crazy stuff that we're going to go through in a while. And I think this podcast is going to be a really good podcast if you want to know how somebody who's from like Wayne, who has just recently started in real estate and able to scale very quickly. At the same time, I want to caution all of you, no matter what we talk here, none of these are easy. It's very difficult to do, and you have a lot of a big why, and that's some of the things we want to go through with Wayne on his motivation and his persistence. Hey, Wayne, welcome to the show.
Hey, thank you, James, for having me today.
Yeah. So I was telling you, I didn't do an interview on Achieve Wealth podcast for some time. I've been on quite a number of podcasts recently, but I didn't do it. But I really want to do yours because I think your story would inspire a lot of people out there. And I want to make sure that we continue inspiring people, right? Because there's a lot of people who are like me. I was in a W-2 job. You probably have a W-2 job, or you've done W-2 job, right? But I want to make sure that somebody who want to be really successful in real estate or apartment investing will be able to hear the story. So why not you tell about yourself, some things that I missed out?
Yeah. So I am in the College Station, Houston area. I was born and raised in Austin. Real estate investing came early to me in actually high school. I had a family friend or friends whose family was active developers in Austin. So I always had the bug at an early age. It was something that always really intrigued me. In the Marine Corps, so I joined the Marine Corps in 2003 and bought my first single family rental while I was in 29 Palms, California. So it was 2004 timeframe is when I first bought my first real estate investment property. And over the years, so I sold that prior to getting out of the Marine Corps in 2007, and then joined a Fortune 150 commercial real estate company and really focused a lot on asset management, property management. So it'll be close to 16 years in June there. But my passion and really my background has always been on asset management, property management. So I always say it's hard to just get a contract or property under contract and then get it to closing is another challenge. But after like day one of owning a property, it's a completely different beast. And having the team and the experience is really essential on that. So I enjoy that aspect on the asset management piece. And then, we're just continuing trying to find opportunities and grow our investors' wealth and try to get through. This time that we are in the cycle of real estate is challenging. Interest rates and insurance and property taxes and a lot of capital still trying to compete for opportunities for returns. So it's been a challenge, but fortunately we found success so far.
Yeah, thanks for giving that information, right? So I just don't want to miss out some key points, right? You have like 33 million right now assets under management.
We do.
And Wayne is the main GP, right? So on almost all of it or most of it, I guess, right? Which is very key, right? Because sometimes people throw these asset under management big numbers, but you find out that they are very small percentage owner. It's like buy $1 Google stock. They say they claim they own the whole Google, right? There's a lot of people out there like that, and I want to differentiate operators who are really doing a lot of asset management work, who are finding deals, who are executing the business plan, and because they are backbone of any deals, right? As I always mention, and I think that's key. So why not we go back to the day we met, right? So I think about 3 years ago when we met, I think in Austin, and I think Wayne called me for lunch. And
Yep.
so where were you on your mindset at that time? Because you heard about multifamily. Why not you go ahead and talk about that story?
Yeah, I think there was definitely a crossroads of, I'm very successful in the W-2 career. I was happy. I wasn't looking to really leave the W-2, more so I just needed to feel like I'm growing our wealth through a diversified means, right? So in commercial real estate, I had been working with clients on their assets and making them very successful and their investors successful. And I was sort of having a come to Jesus moment, like, hey, none of this stuff is like rocket science. Like this is, it's hard work, and you got to be financial ethical and go through the business plan, et cetera. But this is stuff I could be doing. And then I started dug in. I'm like, okay, do I leave my W-2? Do I go into real estate investing full on? And the truth is I was still enjoying, my time with the company I was working for. So, but I also didn't want to invest in office retail, one, because that competed with my day job, but two, I saw the ups and downs in those property life cycles. And one day it just hit me like, why am I not looking at apartments? And honestly, nobody had told me about apartments. I just was like, why am I not looking at apartments? I'd done single family. And then, I did some Googling search, trying to find a mentor in Austin. That's where I found you. We did lunch. But that's really stemmed off. Again, real estate's always been in my blood. It's who I am. Everywhere I go, I'm looking at real estate. I'm thinking of real estate. It's just, I don't know if it's a sickness or what, but it's just real estate is what I love. But that moment in 2019 where I was like, okay, well, this is what I'm going to be doing. I need to, now get a mentor who's already done that process. And I'll say yeah, we've done 33 million assets under management. We have partnered with other people. There are partnerships are, key and important to growth. But for the first 2 years, I didn't buy anything. It was during COVID, there was a lot of learning, a lot of underwriting. I would come to you all the time looking at deals and, they weren't penciling out or there was risk in it. And looking back, I'm grateful, right? Because some of those deals were bridge loans and we probably wouldn't have been talking about rate caps back then. Right. So what position would we be in today if we had gone on doing some of those? On the flip side, it gave a good foundation. So in 2022, the first property we bought was Gallery Apartments, which is now Ivy at the Galleria. And we can dig in on that for sure, much more deeper. But that took about a year and a half? Because that was truly off market. That wasn't through a broker. And we can talk how we came, found all that. But that was our first deal. And then we had another opportunity with a partner on another apartment complex in Houston. And then I participated in a build to rent in Lafayette, Louisiana, that we're building out single family homes. There's going to be 98 homes, but we treat it like a multifamily. And then we have a storage RV boat storage in Huntsville, Alabama. So there's a lot of ground to cover, but 2022 was a very good year, very active year, but it was successful in my view because of the work and the time and the effort in the first 2 years of our company.
Yeah.
So
I think that's the key thing, right? The first deal is always the hardest. Right. And I remember when we first met, you were skeptical. You say, this is James. I'm not sure, where did you find about me? I think maybe in one of the meetups, right? So, but for me, I come across a lot of students who want to be like me, right? And that's okay. You want to see somebody successful. He look normal, right? He talks like me. He walks like me, and why not, right? Why not I be like him, right? And I always have the same feeling whenever I look at someone else, and it's always about mindset and getting the right path, right? So I remember when you asked me how to be successful in this, I said, well, do like what I will tell you to do, right? So, and which is basically, it's all laid out in my course. I'm not trying to talk about the cause. I'm not talking about any mentor, right? But sometimes, there's things that someone will tell you, 95% of the people will never follow, right? Because it's hard work, right? Remember, I've told you, right? Do this, do off-market search, right? And do text blasting, do phone call, cold calling. And I mean, did you do each one of those in the first 2 years?
Everything that and you're right. During lunch, I remember you saying that, I could show you the way, but doesn't mean most people aren't going to actually do it. Right. But I knew I would actually do it. One, because I'm investing the time and the money into it. But one, I really wanted to achieve success in real estate investing. But yeah, I mean, in the course, it talked a lot about setting a brand. And the first slide, I mean, it's been a while, but, mindset, right? Doing a vision board, what's your why, et cetera. Then building the brand, building sort of that pipeline of investors. And then, obviously focusing on product, trying to find opportunities. So we did the off-market search. Through that, I mean, it was a lot of, pulling a report from CoStar of properties that I was targeting.
Yeah.
And
what are the methods of off-market that you try? Why not we?
Yeah. So from an off-market standpoint, I mean, I had a CoStar subscription. I was looking for 1970s and newer, 100+ units, and in certain markets, like I say that Austin, San Antonio, and Houston are the primary cities. Really, just because we live in those cities, we know those areas really well. And then we used the VA, to search, try to find true owners, right? So
how did you do that? Was that like a text blasting, cold calling?
Well, that all happened, but before all that, we went to the tax appraisal district website to find the LLC. Good. So, once we come up with the LLC or the addresses, we go to the HCAD, for example, Houston or Harris County Appraisal District website. There's Travis County. Every county has their own appraisal district, and we try to find the true owner. So behind that address, there's an ownership, right?
So how long did you spend doing that? I mean, how many?
I mean, that alone for Austin, San Antonio, Houston probably took 3 to 4 months. Because not only did we find the recorded owner, because everybody wants to shield themselves as like the true owner, then we had to go to the Secretary of State of Texas website to find out who the true owner. And a lot of those true owners were shielded by attorneys or CSE, et cetera. So anyway, for the most part, we were able to get decent amount of information. And then I signed up for like this BIN verified course where we tried to find, cell numbers.
Yes.
And then we got the cell numbers. We put those into a text blast system. I used Textedly at the time, and then we send messages and calls, and we still do that. I mean, it's nothing. I have a partner, someone on our team who's calling every single day. So James, you might get a call. You're on the list.
Yeah, actually, I got a call. That's how I know you're really doing it.
Yeah, I'm still doing it. Yeah, no, I'm still doing it. And I didn't tell him that you and I knew. And there was someone else who called. I was like, hey, we got a call. No, I still believe in it. It's a much slower process, and it always has to be updated. Transactions happen all the time.
Yeah.
But all that led to a relationship with a doctor out of Los Angeles who owned gallery apartments, and he owned gallery apartments since 2007. And it really was just building a relationship. And we went back and forth on over the year and a half of pricing and way it would look. Sadly, he had a heart attack, but so for about 6 months or so, we didn't really talk real estate. It was just me genuinely asking how he was doing, right? And he wasn't in the mindset to sell. But when he was recovering, I called and asked, hey, you still interested? Are you interested in selling? And so he's like, yeah, I'm going to Houston this weekend. So we met, and I had an LOI already, and I was like, hey, let's sign it. And he signed it. And, that was in April. We closed in August. It was a long closing. But if you remember in 2022, the banking, the interest rates, and like things
Right.
started shaking up, right? And
So it
so
almost took 2 years to come to that stage where you.
it came to 2 years to come to that stage. It absolutely did. Now the next deal was a lot faster. It was through a broker, and it was, those are a lot faster when you go through the broker, right? Because you have a seller who's ready to sell. The off market, you're planting the seeds and building a relationship. So,
but don't you think the second deal came quicker because you already done a deal?
it came quicker because I had a deal, but I also had the team to execute on the deal. So same team that we did the what I call the Ivy, formerly the Gallery Apartments. We renamed it, branded it Ivy at the Galleria. But we bought the next deal together, and that one was a 1030. We had a 1031 investor who took the full capital stack on that. But finding the property and again just the partnership and the team, what was key. This is truly a team sport. I came in the mindset of like, hey, I'm gonna do it all. I'm gonna try to find the deal, raise all the capital, etc. And your pride goes pretty quick when James, it was that time in San Antonio where like it was 172 units. It was an incredible location, hit the returns. We had it under LOI, and then, raising the capital was, a challenge, right? And so we, but ultimately, the success story is still yet to come. Like there's so much more work and effort along this. It's not anybody who's going to be an active investor truly needs to do it for the right reasons and not like, this is not a get rich quick thing. Like this is a long-term, take care of your investors first, always, and then you'll be rewarded, at the end, and so that's the mindset I've taken and what I will continue doing for investors.
It's a slow process, right? So, I also don't rush to buy deals all the time. I've seen a lot of sponsors who come newly into the market, they're able to raise the money using like 10 GPs, under them. And they think that, wow, I'm good, right? I'm good. Now I can go and buy every month. I can go and buy deals, right? So, but they forgot that they have to really asset manage the deal very well to really make sure it makes money. Asset management is where you make the money. And at the same time, you have to buy it right. If you're not buying it right, like during like this time, right, it's going to be hard, right? Because, you bought it at very high leverage or very high price. Now price have came down, so you're underwater, right? There's a lot of sponsors underwater right now.
Right.
So coming back to the first deal, the gallery apartment, I remember when you sent to me, I said, wow, this property looks good. And the price at that time looks good. I know price was low at that time, and I think the seller was not motivated, right? But I remember it just keep on, it's just relationship building. When you do off market, it's relationship with the seller. I think I was on a call with you as well, and I can't remember. I think I talked to him some other time. You say he really likes you. He want to give you a chance. So there are sellers out there who will be attuned with you, who want to sell the deal to you, right? They don't care about the price, right? Price. You can go and give it to the market and determine it, but there are sellers who there's a reason why they're selling it to you, right? So keep in mind, when I bought my first 45 units, I did off market as well, like tax blasting, right? And there was an agent who's a seller's friend. The agent, they all are land bankers, land guys, and they were on a call with me, on a first call with me, and the seller was telling the agent, actually, I'm not sure why am I talking to this guy. Until now, I remember that. So there's a reason why they're selling it to us, right? It's just, I think nature or God or somebody is rewarding you for all the hard work that you're doing.
100%.
Right.
Well, and I tell the gentleman who called you, it just takes one deal. We call hundreds of people, right? And a lot of wrong numbers. But it just takes one deal, for our investors that, it is worth it. So it's harder though, James, I feel like too, because multifamily has gotten a lot more popular than when you first started,
Correct.
Right? And now it's like the mom and pops. That's what I was looking for all those, the years, like the mom and pops who owns his multifamily, he's ready to sell, build a relationship. These owners are a lot more sophisticated now, and they've got a relationship with brokers. And so it's even harder, in my opinion, now to
Yeah,
buy
so
properties because
you got bigger units, right?
you got bigger units, but you also need to take care of the brokers who are taking care of you for the future deal
Correct.
flow. So I respect all that, but I mean, there are cases where people do want to sell off market, and that's great. But also, deal flow for us comes to brokers off market, but again, back to relationships. So joining these conferences and masterminds and coaching programs, it's all about relationships and partnerships. And we do enjoy the asset management piece, but we can also raise capital too. So it makes us a stronger partner going in. But could I have said that 3 years ago? No. I mean, we could do work on that, help on the asset management, but raising capital would have been a challenge for us. So we're getting to a point where, it's even more attractive to partner with CREI partners because we can truly be a valuable general partner in the relationship. Now I'll tell you on the Ivy or the Gallery Apartments, we bought, at a higher price than what he initially wanted. At the time, late 2021, early 2022, markets were very favorable to sellers, right? Later on, the interest rates, and we probably shaved off $1 million during that 4 or 5 months of closing because of interest rates. But one of the things that I'm really keen on is underwriting conservatively, but also making sure we have reserves. We bought a rate cap at 2.75. I think we spent $380,000 on a rate cap back in, that was August. I mean, but it was important for us to buy that 2.75 rate cap because at night today, I'm sleeping good at night. I'm not worried about 10% interest rates or 9% because, you got your, base plus SOFR for these bridge. So the other thing is it was important for me on the debt side. And I think, for those listening, the debt is extremely important to get right. And for the debt piece, there's a lot of bridge that you have to sell in year 2, or you have 1 or 2 years to do it. Well, we got a 3-year bridge loan with 2 1-year extensions. So in my mind, we have a 5-year loan, potentially. So yeah, this last year from a rate standpoint has gone up and it's hurt a lot of sponsors. It hasn't hurt us because we underwrote at the max cap or the rate. So we are where we are on the pro forma. But 2-3 years from now, we can make those adjustments, or we can refinance, right, to agency debt. So I think that's just another important thing. It's like, yeah, you can get the deal, but how you formulate and get the team together. That seller, who I view as a friend, he invested $1 million into the deal.
Yeah, so that was creative financing, right? Because now you get
we're doing creative financing. It was a challenging market time to get in. We had a 1031 investor. The seller believed in what we were doing and our business plan. He's invested in 2 other deals since then.
Oh, really? He has become your investor now.
Yeah, he's become an investor, and but because he knows that I'll take care of it. Like I genuinely, like the fiduciary that I have with my investors, I just really, really care, as you should, as a syndicator sponsor does. But it's been really great honor for him to reinvest. But that was a deal, and it's been challenging. We went through 3 property managers. We've owned it 8 months. We've evicted about 20% of the tenants. We have 5 left. We've spent probably about $1.2 million so far. But the way we bought it and the way it is today, completely different. The roofs have been recoated. 100% of the
NOI has increased.
So we've increased from our average rental rate $250 to $300, and the renewals are close to $150 per renewal. Now we dipped in the low 70% occupancy, right? And so, but we had to clean house. Like it was a mess. We were now at 85%. In the last month, we've gone up 12% on our occupancy. But all that is because we've come in and repositioned. One thing I didn't really think about, James, when we bought the property, you have the physical deterioration of the property that during due diligence that you've got to fix, right? Because you've done your due diligence. Correct. But the thing I didn't really think about, which you learn from, is the perception that property has in the market. That property was known as a second, third, fourth chance deal property.
Got it.
Anybody could go and get a lease at that property. They dealt with a group done deal, and it's like, this guy will sign for this guy. So we had a bunch of criminals and bad. I mean, it was bad. Like, it was horrible. And working with locators and the people around to change that perception, getting our Google ratings up, all that, it's just a lot of work. So we talk about asset management. It's just extremely key, especially during the first 6 to 8 months of a deep value add, that is day-to-day focus on the asset manager.
So but that was in a really good location, right? The Galleria area.
100%. Yeah, absolutely. It's a great, and that's why we loved it. And that's why, we try to buy properties that are in, great locations, right? So that was the Galleria submarket of Houston. And there were case studies of properties nearby that were achieving rents. And what I told our investors and why we were achieving the $250, $300 rent bumps, it's not that we're above market. We're just trying to get to market.
Yeah.
That's the place you want to be, right? Is like, you want to be in a place where I don't necessarily want to buy the prettiest, best property that's already stabilized, that's already achieving the top of market. It's important for us to do a comp survey and find a property that, we can do these renovations, but we have case studies to back us up that we can achieve the rents and the increases where we can. Hey, we talk a lot about revenues too. And it's like, people like, my wife does not like what I do. She's a therapist. She would do free housing for everybody. That's who she is. But it's not all about rental rates either. Expenses. We looked at like landscaping and, services that, are monthly reoccurring expenses, but like, where can we trim, right? And what can we do to go out to bid and still have quality services, but make sure we're getting the best pricing. We went, as an example, $1,700 a month on landscaping down to $1,100, $600 saving and a 5.5 cap rate. Like, that's, pretty good value add to the property just on one contract. Our trash went from $1,400 a month to $700 a month, just by changing the provider. So, there's certain things when there's mismanagement, you go in and you try to find ways to still maintain, good services or higher, but, reduce expenses, just as important as raising revenue.
Yeah. I think key thing is, so the thing is, even for my first deal, people always ask me, we made like 300% in 4 years, but people say, did you buy it cheap? I said, no, I bought it at market, right? Because the previous seller or the seller who sold to me, he was managing it at that cap rate, and that was the market cap rate. But if that deal would have gone to a broker would say, oh, I'm not going to sell you at this cap rate. This has a lot of upside. Why not you pay for the upside up front or give it half? But since you're buying direct from the seller, he's going to sell it at the market cap rate, right? So imagine if that has gone to the broker, they're going to ask you to, pay for that upside upfront, right? So now you are going in and putting in your hard work to realize all that upside. So you got it at a market price, but with a lot of upside, right? And that kind of deal is hard to find the past, 10 years, right? A lot of times, once it goes to brokers, they're going to bump up the price. They're going to send you unreasonable, and you'll be like buying a deep value add deal at a cash flowing cap rate, right? So,
absolutely. Well, they have their commission that they've got to be paid, right? And I love brokers. They're a great source of opportunities and market knowledge. Like, when I go look at properties, if it's off market, I can reach out to one of our broker relationships and they can help provide some guidance on what other properties sold for, or et cetera. So that it's really important to maintain those relationships. But but I'll tell you too, when we went through that process, like, it took April, May, June, July, so 5 months to close that property. But 3 months of that wasn't because of us. It was because the lender didn't have. It's not that they didn't have the capital, but their bent or their
capacity to lend.
Thank you. Yeah, the capacity. They were like, well, we can't close until, I think it was July. And then it got pushed to August.
I think 2021, right? That was the time where every lender was having trouble, right?
Yeah, for us it was 2022 for us. It was like April, May 2022. And but but a lot of the bridge debt lenders were also getting out and not doing any more bridge debt. So
that was the time the rates were going up and everybody got.
Yeah, it was starting, everything was going up. And then that's why we spent so much on our rate cap. But it was important for us to, and that wasn't initially budgeted either, right? That rate cap. Yeah, because again, we were planning on doing a rate cap, but not to an extent of $380,000. So, but going back to the relationship with the owner, I was just transparent, like, and he trusted me, and I, trusted, like, we just had the conversation, like, hey, this is what's going on in the market. This is where we're at. And we were able to have those relationships, or have those conversations on why it's taken a little longer to sell. So it worked out really well from that standpoint. But we're about 8 months into the process, and now we've done all of our exteriors. We've done about 20 interior renovations, and now the focus is strictly on interior renovations, which is exciting because now people can drive by and look at the ivy at the gallery and be like, wow, this has come a long way. Or this is like, I toured it this week, James, and I'm like, I told the property manager, like, I would live here. Like, this is so nice. Exactly. It really is. And so it's exciting that we built a community that, we sort of set this property up for the next 20 years. Like, a lot of the infrastructure has been done.
Yeah. I think the way you're looking at the, value add is very important, right? It's not only like a cash machine or you're trying to make money out of the investment. You're trying to improve people's life, right? So, there are a lot of people who want high quality living condition. And especially when you do with that kind of passion, nature will help you, right? Because they're seeing somebody is trying to make a difference in people's life. And that's part of capitalism, because, whoever come in and help others, will get the benefit of it, right? So that's how we like to do our value adds as well. So good. So that's really, inspiring story. After 2 years of following up with one person, right? So it's a lot of hard work, but you did all the textbook approach, right? Text blasting, cold calling, and establishing relationship. At the end, you found one seller who likes you, want to sell the deal to you. He, of course, there was some price changes and all that, but at the end of the day, he sold to you. And at the end of the day, you did some creative financing as well, where you're able to get him to invest, and now he become a loyal investor. And I think a lot of times people can see who's the hard work, who's the guy who's doing the hard work, and who knows the asset management really, right? And your investors will appreciate that. So do you have any advice to newbie investors who are trying to start at this point of time?
Yeah, I think it goes back. I feel like it's important to humble yourself to find a mentor, right? There's books and there's conferences. All those are great things to learn, but my journey was accelerated because of my relationship with you. And, I know this is your podcast. I'm not trying to, but ultimately underwriting, finding deals, building relationships, how to get through, finding that capital stack, those were all key components. Now, I set up, you have this foundation, at least I have, I have now this foundation. Now there's other programs and other masterminds and other communities and stuff that, I'm able to, find fruit from as well. Right. And so you just continue growing that way, but setting up that foundation for any newbie, it's important. It's finding that mentor. The other thing too, it's the idea that you can do this with no money drives me crazy, because I'm like, it costs a lot of money. Like, you got to pay for your mentor, and some of these programs can be $40,000, $50,000. So you got to have money to get into it. You've got to have money to, pay for programs like CoStar or, there's Red IQ out. You don't need those programs. It just makes it a lot easier, but an investor portal, et cetera, money to pay for your Zoom webinars and your podcast editing, and, the VA person who helps with, a lot of that time, administrative efforts. And it takes a lot. And so you just got to be, sometimes you wonder, James, it's like, it could be even better just be a passive investor, sort of like the amount of money and then the work and then the ups and downs, the emotions of like, oh, it's like fishing. You found something, it's hooked on, and then somehow the fish got away and you're pissed off. You're like, damn it, I missed another fish, right? And that's part of this business too. So it's, you really got to go in and realize like, hey, this is a long-term, this has got to be a long-term viewpoint. If you're going in and like, hey, I'm going to, close my first deal year one, hopefully you do. But it's harder. It's harder than what I anticipated initially. Now the momentum's starting to pick up. We've added 2 employees. We have a director of brand and investor relations. And we also have a director of education, investor education. And then we've got a partner who helps us on the on finding deals, right? So he's part of our company working through that. So we've spent a lot of money on our resources and our time in building that foundation to take care of our investors, but that foundation is set so that we can grow systematically and in a positive direction. So
yeah, that's really good. I mean, we talk about mentor and my coaching and all that. Even though I'm no more doing that right now, I'm done, right? So because the amount of time I realized that I'm spending on my students is a lot more than what I want to spend when I started it. And I just realized that, I need to focus my time on the right thing. And we have focused a lot more on development right now. I would still love to do class B and C value add if I can find the right basis. But time is very critical for me because I just can't do like once a week, 1 hour each is what I thought, right? I spend a lot more hours because students call me to underwrite deals and I have to sit down and teach them. And I'm a guy who want to teach a lot. Because we don't really make money out of this mentoring, right? We probably make less than 1% of what we really earn total, right? So we are real estate investors and we make money from real estate transaction and doing value add. So, but I really want to teach because I know a lot of people want to come to a stage like what we are. And so that's why we started the mentoring. But I realized, I'm giving up too much of my time, which I can focus on my other goals in life. So, but fine, there's a lot of mentors out there. Just make sure the mentors are the one who's mentoring you. There's a lot of mentors out there. They talk on stage. After that, after you pay the money, then they realize, oh, actually, you never really see the mentor, right? Once in a while, they come as a shadow and they go away. And they have a lot of coaches under them. Or there's a lot of mentors who are not really operator, right? They are more of a money raiser, but they're doing mentorship, but they're very famous in Facebook. So they become mentors and they realize, hey, actually, it's easy to make money by educating, right? Risk-free profit, right? Because you don't really play, you don't have to worry about market cycle. You don't have to worry about signing on the loan. So a lot of people become educators, right? So mentoring and education is a big business in real estate. And a lot of people do that, but it's also create a bad perception because a lot of them are not really truly real estate investors no more anymore, right? So they probably were successful at one point of time, but mentors are good, and you really have to find the right mentors who aligns with you, are able to teach you the nuances, right? A lot of times it's not out there, right? I can do 1,000 podcasts, I can write a lot of books, but the nuances of teaching, like, when you hit some roadblock, when you call me and or all my students call me, I can tell you one very specific thing, which doesn't exist in any books, right? So it's very hard to document that, right? So that's where the mentors come handy, right? The tips and tricks to get to the fastest solution. That's very important. So do you want to talk about how can our audience reach out to you?
Yeah. So one of the things that we've been really working hard on is educating our investors and people who are wanting to get into passive investing, but just don't know where to start. So we're starting a course, passiveinvestorcoaching.com. That should launch late April, May 2023. So check out that opportunity if you're looking at investing passively against passiveinvestorcoaching.com. And then you can also check out our website, CREIpartners.com. And there's a lot of educational opportunities there, but also join our investor community and hopefully participate in future investments. So I look forward to this podcast going out, and I'm just grateful for the time you gave.
Absolutely. Love to have you and talk about your story because we're going to inspire at least one person out there, right? And even if one person, are able to follow our footsteps, that's itself is a big win for us. So
Sure.
thanks for joining me in this podcast. And I'm sure you add tons of value to our audience and listeners. Thank you, Wayne.
Thank you, James.